European stock markets are trading modestly higher this morning, with the UK's FTSE 100 index up around about 20 points, while the Euro Stoxx 50 index is higher by 30 points. And in the currency space, the euro is doing better against the dollar. In the commodity space, gold is currently up about $5. Peripheral bond yields are tighter across the board, and core government bonds are also in favour. Good morning, I'm Ishaq, Siddiqi, and welcome to your daily market bite. I'm going to give you a quick idea of what's going on in financial markets today. So we've had the Federal Reserve meeting for the monthly policy announcement yesterday. No change on policies as expected. Investors were looking for further clues to Fed policy in the forthcoming months in regards to tapering of asset purchases. However, nothing was announced by the Federal Reserve as expected. The Fed did reiterate their stance on keeping interest rates at ultra-low levels for an extended period, and at the same time did emphasize that tapering will be very much dependent on the labor market in the US, and any signs of improvement there would spur the Federal Reserve to start looking at downsizing the amount of assets that they purchase on a monthly basis. So the way the market read that statement was that quantitative easing is going to stick around for a little longer. We may not get tapering as early as September. The Fed's done very well to carefully downplay and manage the market's expectations, and we're continuing to see this kind of central bank activity taking place in the global market. Now, going ahead for the European session today, we have the European Central Bank and the Bank of England both putting out policy statements. Both are expected to stay on hold. Both meetings are expected to be extremely uneventful. For the Bank of England, we may get some insight on how the bank is thinking in regards to the uptick that we're seeing in the UK economy. We had to remember that last week GDP figures for the second quarter rose 0.6%, showing good signs of growth in the UK, and that's up with a lot of the economic indicators that we're seeing from the UK. So it's likely that Mark Carney, the new governor, and the BOE have no real reason to add stimulus to the UK economy, given the fact that it seems like we're on a steady path of improvement. Now, going on to the ECB, again, we're seeing good signs of the Eurozone turning a page. This time around, we've had good manufacturing numbers out from the Eurozone, particularly the periphery, Italy and Spain, and now starting to turn the page. PMIs are now in a growth period. This is after years of depressed levels, and we're starting to see this resurgence in business sentiment and confidence in the Eurozone on the whole. So it seems like the ECB will perhaps maybe lift their projections for a Eurozone recovery towards the end of the year. It looks like the Eurozone is going the way that the ECB wants it to go, where we're starting to see a turnaround before the end of 2013. And more importantly, the ECB are going to reiterate their stance that they're going to do whatever it takes to protect the Eurozone, and if that means that we're going to see further interest rate cuts or buying negative deposits, then that's what it means. Now, going ahead, we've got more stuff coming out from the US, jobless claims, construction spending, and of course the ISM manufacturing report. Watch out for those. Other than that, not much else going on. China had some PMIs out last night, which were a little better than expected, but then again, it's not the official HSBC report, it's the Chinese report. Thanks for watching.